Good afternoon, everybody. We're going to start trading together the New York session. And before we get started in actual trading, we have to do a couple of things. The first thing we do is, before we get into trading any session, whether it is the New York session or the whatever session you're going to trade, is you want a general look of what happened in the market in the prior session. We all know if there is any news coming in so that we can be cognizant of these news events before we get, because trading the news is one style of trading, and trading the market in general is a different style. You cannot mix and match the different styles of trading. So looking at the market, and then what we're going to do is that we're going to choose from what happened in some of the currencies that we're going to trade. So the first thing we look at, I want to look at what currencies has given me what we call a reversal in the prior session. So for example, the dollar CAD, you see here I have a strong reversal. This means that the market has been going in one direction. It has turned around and it is now giving me a strong reversal. These strong reversals are quite a strong setup that we need to be looking at, because they usually get some follow through in the following session. You're reading at I'm showing you now how we find the reversals, and then I'm going to put the charts. So I also see that the pound CAD had as a reversal. The pound dollar also had a reversal. See here, this is the London session. The market basically has been moving in a sideways session. So there is a whole four recordings draw on the FX Street about price behavior. But what we have right now is London session. The market is kind of moving sideways. But looking at this chart, my bias is to be long the dollar yen, and to be long the dollar Swiss, and to be long the dollar CAD. And the reason I'm saying that, right there on the pound dollar, we had a reversal. On the pound Swiss, I also had a reversal. So I have two kind of weaknesses in the pound. I also want to take a look at the pound yen. If you look at the pound yen, again, the move is to the upside, and in London, the market also has reversed. So we're getting a general weakness in the pound as a whole. So this way, I'm going to put the pound group together to set myself to be trading the New York session, rather the European session now. So I'm turning the strategies off and setting them all for the New York session. And the reason I do that, again, the first thing in the morning, the pound yen and the pound Swiss, the market is kind of reversing. So I am more inclined to be bearish on the pound, or to be taking the pound on the short side. And I'm waiting for the session to tell me how the market is I'm going now to go, and if we look at the Aussie dollar, as I said, the Aussie dollar has, again, he's continuing to the upside. Then I'm going to join him and benefit. So price behavior, when you talk about price behavior, you're talking about the behavior of the trader. Because the only way that you can see how another trader behaves is how you look at the price action, and you decide if the market, if that trader now, how that trader is going to trade. So for example, take a look at the chart in front of you about the Aussie yen. And you can see here, this is the open from New York yesterday. And right here, I mean, I'm just showed it to you right here. This is one way of addressing the behavior. We try to look at the chart and first identify a price point where the trader is, as I said, going to be a buyer. So if you see this red line from yesterday, even before the New York session, you will see that the traders over here are already above the prior momentum high. The prices now was above the momentum high, so that is buying coming into the market. This was the London session. The market has, yes, it does all of that, but again, that software is your co-pilot. We must have that's a good understanding of what it does, and so that we can trade. I don't believe in black boxes. I'm not a big believer of black boxes, because I have seen, like last week when I was in Mexico last week and we were installing this software in some of the banks over there, they have very sophisticated black boxes, and the traders do not know what's happening. They cannot tell why they are buying or why they are selling. All the professional traders are basically nursing a computer program that is taking a buy or a sell signal. But for us, we need to have an understanding why are we buying or why are we selling, because we don't have the buying power that all these banks do have. Plus, we pay a lot of commission in getting into the trade. It's true that they say that there is no commission to buying foreign exchange, but if you're looking at the pip spread, that is your cost and my cost. When you say you're paying two spreads, I mean, I know the brokers will not be happy with what I'm saying, but it's the truth. You pay 2 points or 3 pips, you're looking at $30 in and $30 out. That's quite expensive. I mean, if you go in and you pay 6 pips and you take a trade and you make 20, you have just created a partner from the broker. He's taking 40% of your gross profit. So we have to be very careful in selecting our trades. So what I'm trying to say, yes, the software does do all that stuff for you, but we need to have a clear understanding why this thing is doing. And if we are in agreement with what the software is identifying, then we take the trade. The beauty of the software is, if I take out these lines, guys, it is going to be extremely hard. If you look at this chart right now, should I be a buyer or a seller? If this thing is going to come down, is it going to turn around and come down? It is very hard for me to interpret this chart. I need to be able to take the high probability trades. I need to be trading a trade in the direction of the market, and I need to know where the market is going to. Exactly, you want to be a buyer, KTD, but in this chart, where will I place my stop? Where the guy that has started buying from here, who's been making money all this way up, where will he decide that is enough and it is time for me to get out of the trade? That is the key. The key is to be with the winner of the trade. You want to place yourself. Put yourself always in the position of the trader that is making the most money. You want to become a successful trader. You want to be able to make a lot of money. You want always to put yourself in the position of the trader that is making a lot of money. You this morning, you're looking at this screen. Okay, I want to take a trade. Should I buy or sell? It is a very difficult position. So the first thing I do is I look at this chart, and I want you to do this with me. We will do this exercise together. The market is opening. We have 10 minutes before the session begins. So we're going to put ourselves in the position of the trader that is making the most money. And of course, he's the guy that has been buying. Okay. Now in this case, we want, the number one thing is to join the trader that is making more money. So we want initially to be buyers. Initially we want to be buyers. The second thing is, I want to know where this guy who's making this money is going to take his profit. Because if he's going to take profits, how will this guy take profits, KTD? If this guy is making this money, if he's long, how will he take his profits? There's only one way for this guy, exactly by selling it. And of course, it doesn't matter below again, for example, here you say, or a reversal point, or below a prior low, exactly. But rather than making all this guess estimate, okay, that's where the software that we have developed comes into play, because it pinpoints the momentum highs and the momentum lows, and these momentum highs, the true momentum high, which is not any longer a guess for us, which is the previous high, which is the previous low, but the software identifies precisely where this momentum high and momentum low is. And as soon as I put these lines up, now it becomes picture perfect, and I can really read the chart and pinpoint where am I going out. It makes my life much easier, because now I have 20 or 30 instruments that I wanted to trade. So right here, below this red line, this where this guy has his stops. So if you long from here, that's my first buying point over here. He's going to trail he's going long with his position. And now the market is over here. He's going to protect his profit by putting his stops right below this momentum high. That here is the location for him to place his stop. And then now we have the second component, which allows me to stay focused on the position. And these are your lines. So if I scroll to the right here and down, then I know that if it gets below my stops, I'm going to go out. Then comes the second part of the trading setup that we use, is that now I want to see what happens in the New York session yesterday. Exactly. That's how to get to the trade. And as soon as I put this, look at this, like exactly what you said. And the second thing, guys, is you need to have reasons to get into the trade. You don't trade on guts. You do not trade based on an indicator. You do not trade you trade based on the price action. We're starting this move about price action. It is, all the people don't use price action because they perceive it as hard. They use the indicator because it's actually an easy excuse. Oh, the indicator turned around. Okay, it's the indicator that was wrong. I was not wrong. That's not the way to trade. This is not how to pay the rent. This is not how to pay the mortgage. This is not how you put your kids in college. So right here, the more reasons you have to take a trade, the stronger the trade is. I must have a reason to get into. It's our software. You can see it at Spyglass Trading. James will put the links for you. So the more reasons you get into the trade, yes, I'm going to give you the stops. I'm going to give you the reasons to get into the reasons to get into the trade. Then we're going to discuss the risk management. Then we're going to discuss adding to our position and then taking profit. Okay? So first let me get you into the trade. We have about 5 minutes before the market begins to trading. So you need the more reasons to get into the trade. You want to have, so right here, if the prices is over here, so this is here, this is my momentum high. So the prices right now are, what I have this arrow here, is above the momentum high. This is reason number one. That's number one. Number two, the market has pushed higher in the London session, and it's already above the prior momentum high, and it stayed here. Look how many days, how long it tried to break below the momentum high and come back up again. Take a look at this, guys. It broke below the market side over here, and it came back, broke down, and it sat here for 8 hours. For 8 hours, it sat above the prior momentum high. That is a sign of strength, because these guys are not willing to sell it down. They are not willing to take their profits. They are saying this market is going up, and they sat for 8 hours above the momentum high. And that's a behavior. Somebody was asking me, where is price behavior? That is price behavior. If you sit, if the trader keeps the market above a prior momentum high for the last 8 hours and they do not sell it to get out of it, that is a good indication for you that this market is still going to continue higher. Okay, 1 second, Abel, I'm going to come to it. Then at the end of the session, it pushed higher, and now I have reason number 3, which is now we're getting into a second session. And right here, what I have point number 3, I have the prices broke above the initial range. So if you look at the screen, you have 3 reasons to be trading this pair, and the 3 of them says that you want to be a buyer. Out of those 3, there is no reason for us to consider any trade over here at 80.80 other than going long that specific instrument. And that's how we trade. We look for reasons based on the behavior of the traders that are already making the most money in the market. And in this instance, the traders that are making most money in the market are telling us, based on their behavior, that they want to stay with their position. They are continuing to buy. They are not ready to get out. So we should now join these guys and try to find ourselves an entry point with a limited risk on the trade so that we can continue with them in that direction. So here, if my buying point would be at point number 3, I would be buying it right there. My stop would still be below the momentum high. So if I'm buying it at 880, my stop is around 850. So I have about 25 pips stop on this trade, and I'm looking for a continuation to the upside. Now, and this is right there. You see the momentum coming in. Look at this move. It took you from 880 to 81.40. Now wait pips. Now let's now hear the truth about price behavior. Most take profits. They will take profits up here. Okay, this is high enough. It went all the way to the high of the day. This is too high. Let's take profit. But if you are a student of price behavior, you would understand that once there is momentum like this coming into the market, that is the number one indication that this market should continue higher. This market should continue higher, and you should be trying to buy it over here. You should try to find, you don't want to jump in and buy it at the top, at the high over here, because that might be a little bit risky, but it is the right trade. I'll show you. So let me put it here just so you can see the number. 81.34 approximately here. So the correct trade is to buy it. And I will buy it. My worst case, I will buy above 81.34 if I cannot make an earlier buy. But worst case, if I cannot buy it anywhere over here, I will be buying it above the 81.34. Now, I think it was, who was asking me about price behavior? Somebody was asking a little bit earlier about price behavior. This was, I think it's either yesterday or the day before. March the 6th, March the 5th. Okay, but anyway, in this case, worst case scenario, if I cannot buy it anywhere sooner, I'm going to buy it above the 81.34. Why? Because I am now identifying a market condition which is trending, which is momentum coming in, and that tells me I need to be a buyer. And look what happened. If I even bought it at the 81.30, well, Alvin, you cannot, yes, you wait for a pullback, that's definite, but what if the pullback doesn't come in? That's what I said over here. If right here I did not have a pullback, you didn't get a pullback, okay? So yes, I would be looking for a pullback if I can get it, but not every time you will get those pullbacks. But the reason is, what I'm trying to show you now is what trading is all about. No, you're not really chasing the market, Crystal. You're identifying a condition and you're taking a calculated risk and you're taking a high probability trade. If the risk is a little bit too high for us, and sometimes they are, I agree with you, then we can say, okay, I am going to cut my size. We do not say, I am not going to take this trade. Here is the difference, which is a very important difference, a very important point for all of us to learn. If we have a system or a methodology that we trade by, okay, let's say I'm using a crossover of a moving average, okay, that's a methodology, that's a system. If that's what we're using, we must, if you are going to become a successful trader, you must take every signal that whatever system that you are using gives you. If your system tells you to buy or to sell, then you must take that signal. We cannot say, I am buying this time and tomorrow I am not going to take this trade, because we don't have the crystal ball to decide if this trade is going to move or this trade is not going to move. Okay? So we must take every signal, but if one trade has a bigger risk than the other, then what you do is you cut your position. You say, okay, if my size is one big contract, then I'm going to take one mini, or I'm going to take two minis. You cut your size, but You need to take every signal because you want to make sure that the outcome, because some trades are winners, some trades are losers. And if you do that, selectivity is saying, I'm going to let this trade go. What you're doing is that might be the trade that is going to move the most, and that's the one that's going to pay you the most. Okay? So you have to take every signal. So right here, just looking at this, because we're going to start trading in 5 minutes, right here, if it gets above 81.64, worst case scenario, I will try to buy it again. Look here, guys. Look here. Right there. I mean, that would have been our pullback. That would be the pullback, and it gets above that, then we want to be a buyer. Exactly. I mean, again, I mean, we get into the detail of the rules, Joe, but this here, what I'm trying to show you is price behavior. Again, I just picked the Aussie yen because this is what we picked this morning. I don't do any canned presentations. I just follow the same set of rules that I'm telling you. And now you can see the move is, and now you would have taken it at 81.65 and the high was 81.90. You would have made 35 pips or 350 bucks in about 15 minutes. And the reason this happened is by following the rules. Okay? And you keep on continuing with that, and that is your move, and it goes higher. You took it from 81.65 all the way, again, I'm just going it with you one by one, all the way up till 82.90, 82.30 if you will. So you had 65 pips just by following the rules and applying the price behavior. Okay? Now let's see what happened in the overnight to that night with the Aussie yen. Okay, this is my new momentum high. You can see that the prices have been sitting, doing exactly the same behavior as here. It's a repeat. So now I'm inclined to be a buyer. See how long it sat on top of the momentum high? That is a strong sign. But if it breaks inside, what if it trades over here, guys? What happens if the market comes? Okay, guys, what will happen if the market? Okay. All right. I'm just not particularly plummet, Joe. All of you exactly we're going to be sellers, but why are we going to? It's not support and resistance. Support and resistance is very difficult to. Let me try to rephrase that. Support and resistance is not. You cannot trade support and resistance every day. There are support and there are buying support and selling resistance or supply and demand or whatever you want to call it. This is all fine and well. Everybody is saying support and resistance and all that kind of stuff. But it all depends on the market condition and it all depends based on the behavior of the traders. Let me give you a simple example again. Let's go back quickly here. The market is starting in 2 seconds. Now, we talk about support and resistance, right? Somebody, again, I want you to look at this here. What is this point? Can we call this point resistance over here? Can we call this resistance? Absolutely. The market pulled back? Yes. So should I be selling resistance over here? If you sell this resistance, guys, it doesn't matter, a pullback, whatever. The whole idea is, if a resistance is a resistance, if you are going to say, because we all know, we have seen what happened into the price going up, but exactly, if the market condition is momentum, then we never ever sell resistance. We buy resistance. See what the difference? If you sell resistance, you're committing financial suicide. Okay? So if I tell you buy support and sell resistance, and I don't know what the difference between the market condition, I am naive. It is naive to do that. This is not how, okay? We need to know what state of the market. Okay, think about exactly, Leonard, I want you to think about driving a car. We all drive cars, right? We all drive cars. We all know how to drive. But if we go from my house to the office every single day, we go through the same road, the same trip, but not every day the traffic condition is the same. Okay? So in this case, if you are driving and doing 65 miles an hour and the highway is clear in front of you, then that's fine. Like, this is the momentum. You stay with that. But if you're looking at the traffic and you see there is a lot of braking lights ahead of you, you cannot keep on stepping on the gas and doing 65 miles an hour, because you'll end up having an accident. So you change your driving techniques or your driving pattern based upon the traffic condition in front of you. Okay? So in this case, you first have to identify the market condition, then decide you're going to buy support, you're going to sell resistance, you're going to buy a pullback, all this kind. Exactly. Of course, you don't need to be driving, trading while driving, Jay-Z, but it's the idea. Okay? We all are good drivers. We know how to drive, but we have to adjust every day to the traffic conditions. And in this case, the momentum here is basically the traffic. So anyway, let's look at our session right now. And look here. Now, this is a very pretty picture. I have this as my momentum high. The market is sitting above those three sessions. And right here, this baby is now, if it pushes above my range, and I want to see what the range here in Tokyo in the Aussie yen, it also is a good range. The Aussie dollar is also good. So I'm just waiting now for but in this case, I want to be a buyer of the Aussie yen.
Order filled.
I took one right there. And my stop is on the other's momentum. So my momentum high is 82.29. My stop on this trade is about 20 pips. My stop is about 20 pips. Let's see what other things are moving. Well, actually here we have now basically there is nothing over here. I mean, all the market is inside, right? But I just took this trade, so, and my stop is over here. It's a high probability trade, so let's see what happens. Let's see the dollar yen. Also, the very similar pattern with the dollar yen. I have the momentum to the upside. We're sitting above. If it gets above the 90.40, I'm going to be a buyer also. Pound CAD. Put the pound CAD over here. We have a bad tick over here. I'm just going to refresh the screen. let's put the pound CAD, the other side of the range. I'm going to close the trade. If it gets to the other side, right below this line over here, I'm going to close it. Let's see the dollar yen. Any news coming out at 8:30, guys? Anybody that's watching the news, anything coming out at 8:30? Today's Monday. I doubt if there's anything coming out. The euro yen, let's see the euro yen. This is the euro yen. It came back above the range. So I'm not going to give it too much time this here. If it gets above the market side, I'm going to close the trade and get out of the trade. Okay. This is the pound dollar. We showed the pound dollar. Let's see what else we have on the radar screen. These numbers over here. There is nothing really happening in the market. The market is it's quite dull. Except for the Aussie yen, it's just turning around. Now, exactly. No, you want to be waiting for, now this has reversed, guys. Look at this here. My stop is below this momentum high, which is below 29. So if it gets below this, I'm just closing the trade. Okay, let's see what else we have. We have no signals. The dollar yen, we have no signals. The pound CAD, nothing. The euro pound yen, nothing. The pound dollar, it already came 2 pips and it's just sitting there doing. So, if it gets below the 82.20, this is what I'm going to turn around and take it short. But so far, it is hanging up nicely. The euro yen is also hanging okay. The dollar, the pound dollar is also not moving. But for the time being, you really don't have a trade. James, could you please give them my email address? Based on this, yeah. I mean, that's what it says. I mean, and if you look at the radar screen, I don't have the New Zealand, but look at the radar screen. We can put the New Zealand, the pound, and the Aussie New Zealand in a sec. But look at this. The Aussie dollar is at the low of the day. When you see these numbers here, looking at this radar screen, I can gauge the kind of stuff. I mean, it's just showing off. You need 2 screens. One, the way I have my setup is like this. This is my radar screen. And this is what the trading plan that we do every Sunday afternoon. This means that the prices have traded below the price and I'm already short. So these are our short position. Anything in red is our short position. Anything in green is our long. So looking at this radar screen, you can exactly know what positions we're in long and what position we're in short. Okay. And you can make your trading decision. So if you look at, let me give you an example here. Pound, for example, our buying point is 90.10. It is 90.20. So we're up already 10 pips on the trade. So you have $1 screen that gives you positions of where you're going to go long and where you're going to go short. And you know your bias for the trade or your reference point. So you have that on the radar screen. And then on the second screen, you basically have your picture of the market, what's happening in your trades and what's happening. You have two charts. I have a daily chart like this and an intraday chart. The daily, to be honest on my trade, it tells me which side of the market. So this daily chart is very important to have it side by side to the intraday chart. How many decided to go short and sell something only to see that the market turn around and start going up? And how many times you decided based on the intraday chart that you want to go short only to see the market turn around and start not know the difference between the pound yen and live hogs or corn or apple. It's a moving average that trades a moving average. It does not know what they are plotting on something. It is curve fitted. If you have a way of trading, okay, or a software or anything, and you're applying it in your trading, it should work across everything. You have very big winners and sometimes you have very big, you don't want big losers, if you will. And what we do, we take all the trades that we do on the Sunday session. I mean, we do the way we work with you guys, or we work with this, is that we actually trade live, that we are in the, let me take a look at, oh, it's inside the range, so it's no big deal. I'll put a gold chart for you. Cost of doing business is very important. You have to keep the cost of doing business very low. Okay? You want to make sure that your rent is low. You want to make sure that electricity is low, and you're making the best use of your time to maximize the return of your time. So every African, and I'm going to pay, $150 to get into the trade. What's the point? Exactly. Well, I mean, it's still, even if it's small, it's all, I mean, if you take a trade and you make $10 on it, if you take one mini lot and you want to make sure that your costs are extremely small on the trade. What's 50.11? The pound is, that's it. Making money is a very important thing. We all want to make money. That's why we're in this business. But you must not take leverage, with the futures and stuff like that. So, doing 100 to 1 or 200 to 1, and that's too much. It cuts both ways. Okay? You don't want to leverage anything over the common sense is not good. Always have common sense in your trading, because you want to, which one are you talking about? Which pair are you talking about, Len? Yes, exactly, Len. Yes. No, the 5106. Hold on a sec. No, I'm taking a look. Leonard is asking about the numbers, so I'm just checking it out. The number, the 5106. Your number is 149.5. Okay? It is a rally. This is not a trend change. And if it gets below 149.80, you want to hammer it down. You want to press the short side below 149.80. All this move to the upside is a second chance or opportunity for all those that missed shorting the pound at one. I mean, we were short from 166.62. I'll show you the short. 166.62, that was the significant point. Right there. That is the short right there. Right here, this is where all the longs have failed and started to go out. And this is where we took the short. And that was your second significant point right there. And if you look at and we took the trade and if you see here, this is a significant point. If somebody says to you that this is support, I mean, that's what it gets to me when somebody says support, buy. So right there, this, yes, looks support, but if you buy it over here, that's what's going to happen to you. You take it from here and that's it. You're already down 1,000 pips. So we just have to be, again, knowing how we are getting, what style of trading we should be doing. Should we buying support and selling resistance today, or we should be doing something different? Okay? So, the pound dollar is still holding inside the range. I'm looking at all the currencies over here. There is nothing really moving. I mean, everything is just, when you see those high percentages point, this tells you that the whole market is not really making much of them. Anyway, I'm guessing, I don't know what time we are. Yes, Pippin, we have, I'll open it now. I guess we've got a few minutes before we close, so I'm going to open it for questions and answers. If anybody has any questions, feel free to type them down. It is not support, Callahan, because, no. Again, bull market, of course. It's a bear market. The key need to know what is this trading now is to speak in one specific direction. You need to be taking trades in that specific direction. When the market is bearing down and you buy support, Callahan, what you're doing is you're catching a falling knife. It's not, and if the market is rallying on the way to the upside, again, you are trying to step in front of a freight train, and either of those situations, whether you're catching a falling knife or standing in front of a freight train, it shouldn't be, it's not going to be, so it's not going to be healthy. So the key is identifying the market condition. Okay? All right, so 151, somebody took the pound dollar at 150. Hold on a second. Not particularly, Callahan. You don't wait for the support to prove itself. No, you stay with it, Eric. Eric, you're all right. You stay with it. This here is the if you identify the market condition, then you decide you're going to buy or you are going to sell. Yes, I'm in the euro. Somebody was asking, I have several questions here, so I'm just going through the questions quickly. Yes, we do have somebody's asking Pit Find. Yes, we have two software. One of them is a day trading, which is the one that you see over here, and you can trade 5 or 6 pairs, and you can put it on autopilot. It will get you in and get you out of the pairs. As that's the short term. The long term, which we call the position trade, this is what we use in the fund. Right there, and it trades, and basically it takes position trades. You're looking at, it will take a position in a trade from a day to 6 months, if you will. And just by looking at the radar screen here in the long-term system, it will pinpoint for you where to buy and where to sell. So, for example, this is the index of the pound. And if I turn the strategy on, without formatting, we don't do any formatting, nothing. There is your trade in the pound. Every blue line that you see here is a winning trade. So it started last year shorting the pound at 194.29, and it covered the trade at 153. You had 4,000 pips on that trade, and it took it from August 2009 until 2008 until December. He stayed 6 months in this trade. And right now, we're short the pound from 158.42, and it's right now 151. So you're up about, I would say, 700-800 pips on that trade. For futures, there is a lot of excellent futures brokers. I mean, futures, again, your broker, if your broker doesn't do your service, shut your account with him and open somewhere else. It's your money, you're the king. Okay, he's doing you a favor. There is Global Futures, there is RJ O'Brien, there is PFG. They're all excellent brokers. What's the stop loss on the pound dollar? Right now, I'm getting close to getting stopped out of it. But the market is just, I find out exactly how long do we have. This now here is not, I'm not happy with this one here. So this is not particularly good. I mean, so far it has been, if you look at Delta and the retrace. Oh yes, absolutely, every day. I mean, we trade together every day for 15 trading days a month. We trade the 3 sessions. We trade London, New York, and Tokyo. There is a couple, Mike is with me and Janet, and we trade the 3 sessions. So basically the first 2 hours of every session, we are trading. And, I set my calendar. That's the beauty of being a trader. You set your own time. Lost on the trades that, let me see I'll show you one of our positions. Hold on a second. I mean, we are short. I'll show you some of our positions. As I said, in the Sunday session, we take our trades with our clients, with everybody that comes in our trading sessions. That's the euro yen is bye-bye.
Order filled.
The pound dollar is actually also reversing, so thank you very much.
Order filled.
I closed them all. Let's see what's happening now here in the radar. The pound yen is near the high of the day. Let's see the dollar yen, because that's going to be my key. And look at the trade that I took this morning. Other side. Now this one I'm going to take again, and this time Aussie yen. Why? Because again, everything is first gave me a head fake to the downside. I closed my trade on the short. Now it is coming back. This is now a confirmation that this market wants to rally higher. So I took the trade and I'll stay with it. Now I want to see the rest of the yen pairs. Domir stayed long at 50, very good. And somebody has the pound dollar on Derek. You have it above 150, 150, so that's okay to 50. Yes. You're very welcome, Callahan, anytime. The one thing I just want you all guys to see that Callahan is, I mean, when we're trading mainly just the price. If I'm going to make a decision, I want to make a decision on the price. For us, the price is the leading indicator. It is the truth of what's happening into the market. And I need to have clean and clear information for me to make a decision. And there is nothing more clearer than the price. That's all. If you go to the, Ash, I mean, I don't want to do this as a promotion and stuff like that. But if you go to the website, as I said, every Sunday, when we do our trade planning session, which we do every Sunday, we take the trades. For example, if we say we're going to buy something or we're going to sell something, we actually take those trades live in an account, and we have a trading account, live trading account that mimics the trading plan that we do. And you can see those positions there live. So this is the, I mean, I can show you, for example, but anyway, take a look. You can go to the website, and I think you can see some of the history, and you'll see you can see the whole result. Okay. What else? I mean, guys, we've been on now for a couple of hours. If anybody has any questions, feel free to ask it at least. So good luck, Callahan, and that's it. I mean, I wish you all the best. Looking at your reference points, for example, right here, you want to be looking at your reference points, and these reference points tell you the direction of the market and which way you want to be, and you want to see towards. Sometimes the market is in high. Eric, it works on FXCM. I mean, this software is comparable with FXCM. We're still, I think FXCM and DBFX are probably exactly, they are the same, so it should. It works with it, it gives you automatic execution, it gets you in, it gets you out of the trade. So our software is, I'm not sure with Oneida. I mean, we are fortunately in the beginning of February, our software now works on Bloomberg. We have set it up on Bloomberg. It works because we have a lot of institutional clients. I'm very proud to say we have several major banks. I mean, if you go to our website, I don't want to drop names, but some of the largest banks in the world, they have the institutional version of this software, and they follow the same methodology. I don't tell you come and learn to trade like the pros, or what we will tell you, come and join the pros that we train. We have the evidence to back up that we're training professionals, we're training bankers, and we have the evidence to show that. No, it is not a black box. It is a black box in terms of the code, because the source code took us years to put together. But every rule is explained to you in detail, and you would see that, for example, here, Boyke, I'm sure that you would see, for example, here, that is written, why did we get out of the trade? And for example, here, you see here, it says it failed the market side. So now it's telling you why it's getting out of the trade and why it is getting into the trade. So you know why the software is doing what it is. So in that sense, it is not a black box, it's a gray box, because every rule is explained to you in detail, and we train you on it. trading is not something that one would learn from a book. Trading is not something that one can adding like a sport, like a coach that tells you what are you doing and there to guide you through changing conditions. There are no 2 days in the market that are alike, and you need to be doing at least you need to be consistent when the market is completely inconsistent and it doesn't. No, Abel, I think they can arrange for you. I mean, what we do in the trading pit, just send James. Abel wants to attend an online session. Could you please take a look at that? What we do in the trading pit, guys, we have 2 kinds of trading pits. One in the office here in London, and the other one we do it online. And basically, we in both sessions, the common denominator in both sessions, we give you a computer. You come in whether to the office or online. We do a desktop sharing, and you take control of one of our workstations. Okay, and we teach you a couple of the rules, and we ask you to take over the computer and control it, and actually buy and sell. You test for yourself the rules that we share with you. So, for example, if we come up and based on today's market condition, we decide we're going to buy, you will actually be buying with our account. You will see where did you get in. You will see where you're going to get out. And you will see the outcome if this thing works for you or not. Okay? Not every bank has the software profit, but then again, I'm getting whipsawed in the pound yen, the Aussie yen today. But the whole idea is the market is so big that neither you nor I or having another 10,000 traders could affect. This is a $3 trillion market. I kid you not, Prophet. Last week, I was with in a big bank, or actually the 3rd largest bank in the world. I was trading the traders in the 3rd largest bank in the world, and this young lady actually trades every day herself. Just this is one person. She does by herself $1 billion every single day. Okay, so. I mean, how many $1 billion do you and I have? I wish we had a few. But the whole idea is the more people that follow the same rules, the better it is for us. Because if everybody's jumping in, then the more it is, they will push the market in our direction and they will give us actually a better entry. Plus, they will push the market in our direction so that we can maximize our profit. So the more people we use it, the better it is. No, it's not a monopoly. No way. There's no monopolies anymore, especially in the financial market. There is maybe minor manipulation, short-term manipulation, but nobody can monopolize the market. No, that's not true. In the trading pit, you're welcome to attend it for free. But our trading room, when you, we have a live trading room that I think Boyke was asking that we trade in every day with our clients. Yes, we do. This trading room is only for the traders that took the course, because we actually trade live money like what I'm doing with you here. I trade and they trade. Okay. And if you are in the room plus and you're taking a live trade, I owe you my undivided attention. Okay? So I do not go into explaining to somebody like I'm answering you some of the questions over here. Why are we buying and why are we selling? And you are on the other side. You have an open position. I cannot do that. Okay? So let's stay on the topic because they're asking. As I said, we don't want to But anyway, you can ask you can call the office and they will tell you about it. But anyway, the idea is, let me go back to answer some of the other questions about the trading. So, who has a question? I mean, we have another 5 minutes to go or 10 minutes to go. So rather than starting a new topic. Okay, so what we're going to do is, just for the time being, the Aussie is coming back inside the range. The pound CAD is beginning to push up. So I guess the pound yen is staying silent. Okay, okay, all right, lovely. Okay, we've got 5 questions. This easy, so then let's try to answer these questions. So the first question is, where would I short the pound again? So let's go to the pound dollar, and you always want to enter your trade based on what the chart is setting up for you. And for the pound dollar, in this case, it's another significant point. Now, identifying the significant point is one third of the job. Learning how to use it and how the market behaves at this point is where the training comes in. And show you all these points many times, but how to it requires a little bit of work and doing on your side. And what we try to do here is show you how to identify these points and then work with you, alongside you, every single time we get to these points to identify how we are going indicators or there is nothing in that. What we do is structure, identifying the momentum of this chart and where the traders are changing their buy. Of course, Boyke, you have to have a consideration the fundamentals of the market, and you have to have a good handle on the fundamentals. But you cannot trade fundamentally. If you want to use fundamentals, they will give you the macro or the general direction of the market, but you cannot trade fundamentals. You can begin to see that the pound dollar has been rallying from 151 all the way up to 162. Now, we all know fundamentally that the UK is in the economic conditioning them and they're having serious troubles. That appreciated 10%. The dollar from them till high. That is same thing. Fundamentally, you have to have as I said, a general understanding. You have to have a good handle on the fundamentals, but to actually trade on a day-to-day basis, I don't think it pays. I'm more of the technical side rather than just being fundamental. I mean, you see the reports, you see. I'll give you all a very good example. If you have a trade, go to plot a chart for the dollar yen. Let me see if I can show you here before the end of the session. I'll show you a very good example about fundamental trading. And do you remember when did the Federal Reserve Bank? Okay, we know, all of us know that foreign exchange has a direct relationship, or the price of the foreign exchange has a direct relationship to interest rate. You agree with that? So if interest rate, price of the interest rate would be much higher. So all we get is that higher interest rate, you will be buying it, and you're looking for a currency that has a lower interest rate, and you would be selling it. Okay? So I've been given a heads up. We're closing in 2 minutes. So next time I'm going to show you the fundamental setups on how to trade. With that, guys, I thank you very much, And if you have any questions, you can send me an email at info@spyglasstrading.co.uk, and I will be very happy to answer any of your questions. Okay, so send an email to info@spyglasstrading. Make sure it's .co.uk, not .com, and I will be happy to answer. So thank you very much. It's been a pleasure being with you today, and have a great time. And I want to thank FX Street, and God bless you all.